There we go. Thanks, Riyadh. Thank you very much. If I didn't catch your message, I would have been kept talking in the mute. Good morning, everyone. How are you doing? Good afternoon, good evening. I feel so blessed to be here with you all today. Looking forward to today's session. We're gonna get started in just about 1 minute. You hear a sound. The sound is terrible. Sherifu, hold on 1 second, everyone. Let me figure out what's going on here. Sound echo. So interesting. I don't have anything else running. All right, guys, I apologize so much. I don't think I have anything else running. It's hard for me to understand where this echo is coming from. Just one confirmation from someone. I don't know where their noise is coming from. If not, I'll restart my computer. You guys still hear that bad sound? Test, test. Speaker high volume. All right, and how's this? Because if not, I'm going to restart my computer and I'm going to have to apologize for you. All right, I'm going to restart. No idea what's going on. I'm just going to restart my machine and I'll get back on live with all of you. All right, hold on. Let me make this a little bit lower. And then how about that? Oh, I hear the beep. Test, test. And new mic. All right. All right, I put in a new mic. We're all set, sorted now. You guys are champions. Appreciate that. I have no idea what that was. I was using the same mic I use every morning, and just something happened. So either which way, can't hold us down. Sherifu, I'm great. Thank you so much. I have to say, I am just astonished at how my wife's been handling everything and holding down the 5 kids, homeschooling them all. I feel very, very blessed indeed. Danielle, Mata, Roman, everybody in here. Hey, Jim, good to see you. Jesse's got us at 12 o'clock, 12 o'clock noon Eastern time. We're having the vote in the Senate. We're going to have to watch price then really closely and see how the market reacts. Jordan Sunset, Mr. Jazz, Jesper, Riyadh, everyone. Good morning, good morning, good morning. I'm really looking forward to today's session, and I actually really want to get into it with all of you. I'm going to show you exactly what I'm looking at, and I really want to get some insight from everyone. We're going to look at probably what yesterday. Indeed, we are ready to crush it right now. Market's a little different today, if you've noticed, or if anyone's noticed. Meaning, let me pull up some charts. Where are we? Market's a little bit different today in that we're not seeing Canadian dollar, Japanese yen is up 1.2%, but that's normal to see one or two pairs up that much. But everything else is kind of settled into normal ranges. Okay. So that's just the first thing that I noticed today. Now, there are a lot of pairs that look like they're possibly getting ready to be nibbled on. So really want to get into it, the two possible outcomes we could get from here. All right. Now, granted, we do have now the S&P not trading at its highs yet, about 1% off its highs. If the S&P, we have to start here. If the S&P breaks where my mouse is up, 2,500, the whole number, 2,500. If it does break up there higher, then I do think on the back of this stimulus bill being passed, it is possible we could trade up higher, and that could possibly mean a little bit of more of risk appetite for the coming future. We have to watch price action really quickly. Sometimes you're looking for something, because I want to talk to you all about something this morning, and we're going to get into that in a little bit. But sometimes you just come across something, and this is from Adam on Forex Live, and it really hit what I was looking for. Let's see what he said that I like. First of all, the numbers in Spain were a huge jump today. 8,000 new cases, up from 5,500 yesterday, right? That's not good news, because what we need to get into does involve, unfortunately, the current situation of the world. But so he's talking about the stimulus getting passed, and he thinks it's an important moment for risk assets in general. All right, this is what we're going to be focusing on. I believe that the Fed's extraordinary actions have inverted an acute financial crisis. So this morning, as I'm making my coffee, and oh man, do I love my coffee, I was thinking to myself what I want to really discuss with all of you. And and Dinkar, I know that you want to look at the Australian dollar, US dollar, that you believe it's at an important level. We're going to get into all of that in just a moment, but we got to start with what's most important. We got to frame what's before us right now. I also was thinking, before I read this, I was thinking to myself, in 2008, the actions taken by the Fed were enough to not only prevent a full-blown collapse of the system, but shortly then after, the loads were put in, and the economy recovered. And then the next thing I thought in my head, well, this is nothing close to 2008, right? Because back then people were working. Companies were laying off lots of workers, as they're doing right now, but there were also the economy was moving. It's a big difference. But the scale of the damage is coming into focus, and even $2 trillion isn't enough to fix it, on top of the $4 trillion by the Fed. So this is the important part. I think that the rally in equities and unwind in the dollar can continue for another day or two. If I'm wrong and it falls apart today, then it could get ugly fast. So, and I see it the same way. He articulated it a lot better than I could have. But so we're watching the vote today at 12 o'clock, right? We have to watch how price reacts after it. Now, if you guys know from yesterday what I think is going to happen, the bill is going to pass, market's going to get euphoric, and then as President Trump signs it into law, things will fall apart. What Adam is saying is, if it falls apart today and things start trading down, it's gonna accelerate, right? So what does that mean? Well, if we see that happen, first of all, and I remain long S&Ps here, but if you're risk assets, US dollar, first of all, Swiss franc, Japanese yen, those could turn around pretty quickly. So I do want to get into some charts. Australian dollar, Swiss franc, I notice up here,
took out this area of resistance last night. That made me very happy because I'm hoping that we get, again, a little bit more risk. I don't know how long it will be. If we start trading below here, if this is a failed break and we accelerate to the downside, if we see US equities start turning red and then going down 2, 3, 4, 5%, right? I mean, the party's over, and I want to position myself. I want to position myself long Swiss franc. Um, absolutely. Now, before I get going on a tangent, let's look at the Australian dollar, US dollar that Dinkar mentioned is at an important level. It looks like it's mirroring to me the Australian dollar, Swiss franc up there. If you notice that, the exact same pattern that we were looking at over there, except that this one is into a little bit of resistance. Now, I have to be honest. I cut my at the wrong time yesterday, at the exact wrong time probably. I cut my hedges on my euro shorts. I cut them at it seemed like it's probably a half hour before New York ended. It seemed like the exact wrong time because price traded up 70 pips from the time I cut off my hedges. You know, and it looked to me like the dollar strength was resuming. Is my first wrong play in a couple of weeks. You know what? It's part of the game. I don't have a good read right now on the dollar. All it seems to me that the dollar is pretty much holding steady. And if you watch the U.S. dollar, Japanese yen, you can see that that is it's positive on the day. You know, the U.S. I need to talk about the dollar before I could look at the Australian dollar, U.S. dollar. You see here that the DXY is really just consolidating over here. I wouldn't be surprised if it pops up and goes on to new make highs, and I wouldn't be out of this consolidation and you can see the consolidation happening right here. If it breaks down over here and comes into this little bit of a better area to lean against. So everything's in play. It's just a question of really watching how price reacts and whether or not the retrace consolidation phase we're in continues today and or tomorrow, or we start accelerating out of it. So on the Australian dollar, US dollar, we are into that area of resistance, and it is an interesting area. The Australian dollar has come off from and we're looking at what? I mean, and then we need to, after this, we need to get into the important piece. What happens next? And by next, I mean, what is going to happen over the next 3 and 6 months? That's really the important piece. And could we know what's going to happen 6 months from now? Probably not. Could we know what's going to happen 3 months from now? We could. I hope together we could figure that out. So you know, there are definitely predictions of 40 cents on the Australian dollar, US dollar, and if things get bad and we get a resurgence in China, sure, all that's in the cards. What happens if the low is in? Is it possible by the middle of April that the US returns to work? And I don't think so. I don't think so. I don't think so before the end of June, July. That's even a possibility, right? I know that a lot has been thrown at the markets lately. Spreads have come down, but I don't know how long that's going to last. Is this the place to lean in against this resistance? This is the question Dinkar is looking at and asking. You can see on the 4 hour, and normally the 4 hour has been better than the 8 hour, not more profitable. Not that the 8 hour is bad because of these fast moving markets. We're seeing volatility come down a little bit today. It's hard to say whether that continues or not. You have a signal here, at least on the 4, not on the 8 hour. Is it too soon to get into? Listen, your risk is really limited here. You know where you're right above that high over here, put up during London. You know where you're wrong, and to get out of the trade is a good place to lean into. Well, I think as he put it, it's interesting. You do have this little bit of a trend line you could see, and that line has not broken. And generally, waiting for that break of that trend line could be a little bit safer, right? Is this an aggressive entry? A little bit, but not a bad one, a good one. You know where you're wrong. There's much more. The risk to reward on it is from the get is really solid. And just so everyone knows, if you are someone sent me a chart yesterday, and it was a beautiful chart. And I think my response was something to the effect of, if you take those setups all day long, there's no way you could end up overall on not profitable. And same thing right here. You could take this setup all day long, pull back into strong resistance. Is it strong resistance? It looks pretty strong to me. We retraced what looks to me from at least from here to here about 1/3 of the way into resistance, price being rejected. You take this setup day in and day out, right? Because your risk to reward is such that it's gonna work out. There's no way you won't make a living in this, or there's no way you won't build up wealth, I should say. Good, Thomas. Oh, risk on. Right. Perfect. And I'm hoping, Thomas, that we get a little bit more of that. I'm hoping we get a little bit more of that. Genuinely. We are right now, just to give everyone a check, about an hour and 15 minutes to the vote. It's really important to see whether or not the U.S. equity markets could hold on to these slight gains they have into the vote and after the vote. Got to watch price. Gold is trading, all right, pretty much unchanged on the day. Now, really the most risk on, risk off. This is the most important conversation that we need to have at this moment. You could see here the Australian dollar Swiss franc, actually, it cleared above this light resistance over here. I put it as support right now, just so I have a little bit of a marker. This is strong resistance. I would love to get a look all the way up to there, right? So, this is, I wanted to be a part of this. I didn't chase it. We're back up here to a level where it becomes attractive again. Question is now, when do we get into it? It's what I'm waiting and watching for. So the reason I say that is because I do believe that everything being thrown at the markets right now will not be enough. The possibility exists that it is enough. The possibility exists that this is the low in the markets. I don't think it's the case. I think we're looking probably something more along the lines of bounce and then boom, 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 boom. I think we trade down, S&P's down to 1400 at the very least, or I shouldn't say the very least, somewhere around down there though. I think this is nothing more than a little bit of a relief rally into the markets, and we're going to see the governor of New York, Cuomo, yesterday was talking about that this is not going to get better anytime soon. The fact that probably this is at the very best going to go through the summer. Now, it's a little bit easier in China controlling things with, first of all, fake numbers, and second of all, with, did you see them sealing people in houses? I can't count the amount of places I saw being sealed off, people locked inside their house. Like, you can't do that. That doesn't happen in the West, right? And it's hard to say what the best case scenario is anymore. I foresee prolonged economic damage in a big way. And I'm looking to really get long risk off assets. But Thomas, as you're saying right now, I see risk on. Does anyone have any type of bullish case to where they could see President Trump was talking about by Easter that they would have, the people returning to work, the economy picking up again? Apple is talking about in April opening up stores in the U.S. Does anyone have any type of thoughts that we could have seen the worst? Because if we've seen the worst, I don't want to get caught on the wrong side of the trade here. I don't want to get on this pullback, get short, risk off assets, and then get really hammered. Just checking in the cases today, it looks like Italy is about to overtake China. Spain and the US are really just picking up everywhere. I think we're every 3 days now doubling cases in New York. Mohammed, good morning. How you doing? Right, Dinkar, it's a good setup. You saw for sure. Mr. Stiff Jazz. What's EW? Alberto. Imran, if you're looking at any setups that you're looking at, you want to send the chart over our way, me to take a look at, please do. Happy to look at it with you. So Samantha, this is really important. How do I feel about the milkshake theory? So as far as the milkshake theory goes, Samantha, I'm going to start here first of all, back to the U.S. dollar, Japanese yen, which I am currently long, positioned. I would say about a quarter. Scaling into it about a quarter of the way. If we break over here, this has to do with the milkshake theory because it's dollar based. I expect during risk off times the Japanese yen to outperform the dollar as it did in 2008. I don't this time around. I expect the dollar is out going to perform. I am a fan of the milkshake theory mostly, right? So let's talk about that. I'm following the charts though, Samantha, and right now above this trend line and above 109.71, I'm bullish the dollar. If we break this resistance here at 112.20, I am super bullish the dollar. Do I believe that this could go as high as 150 and or 200? Absolutely, I do believe that. Do I believe that the euro US dollar could go down to 80 cents? Absolutely, I do believe that. Are we seeing what's happening with the US dollar, Canadian dollar? Do I believe that could go above 2? Absolutely, I believe that. We're looking at the US dollar, Mexican peso trading at $25, $24.50. Do I believe that could go to 32 now? Easily. We are seeing the US dollar wrecking ball just begin. This is the early innings. Now, Goldman Sachs put out a report yesterday that they believe as the dollar appreciates here, it's possible that the U.S. Treasury will act against it. Do I believe there will be action versus the U.S. dollar? Yep. Do I believe it'll hurt the dollar? Yep. Do I believe the dollar will recover? I don't think that. I'm very bullish on the dollar milkshake theory. However, you do have some smart minds that take the other position. See, it's timing for everything, though. It's timing for everything, and everyone who is bearish on the U.S. dollar in the end will be right. Right? Because ultimately what will happen will be the U.S. dollar will be devalued greatly. Hence why build positions in gold, build positions in Bitcoin, especially in these times, right? So, and Brent Johnson, Milkshake Theory, is very bullish on gold. He just believes that the dollar is going to be stronger in the near term, and he's probably right. The part that I'm not so sure about of the Milkshake Theory is when it comes to U.S. equities. He believes U.S. equities, wow, which are all over the place this morning. Wow, U.S. dollar is coming on strong this morning. That's good. Like that. He's bullish on U.S. equities, and he believes that as things get really bad around the world and the dollar starts to appreciate and appreciate and appreciate, that you're going to see foreign capital plummeting into the U.S. equity markets because of that strong dollar. So that makes sense to me. It just seems to me in a deflationary type environment that the U.S. Equities are also going to get crushed. So that part I don't really, not sure that I agree with. But how close are we to the vote here? We're still an hour away. We're seeing markets now trending red. We're seeing that pick up in the dollar, which I am positioned for. What I would like to get positioned for, which I'm not, and I don't want to miss my window, is my risk off assets. Thomas, if you change your vibe here, and what makes this hard is as the bills passed, trading's always hard. As the bills pass, do we get any type of uptick and euphoria? I don't know. I don't want to miss the boat here on Australian dollar, Swiss franc, New Zealand dollar, Swiss franc. but I may. But I am positioned for the dollar strength. So Thomas, don't get whipped around though. At the same time, I think New Zealand dollar, Swiss franc almost mirrors the Australian dollar. Let's take a look. The only difference I could see is that the line of resistance I have in the New Zealand dollar did not make it above where the Australian dollar, Swiss franc is above, right? So a little bit weaker here. They're both very similar plays though. So for my own personal portfolio of the crisis, and I'm not in either one of them. I would like to be in both, but therefore positioned a little bit, evenly among them. If normally if I was trading, for example, if I was going to trade one lot, for example, I would divide that between the two. Thomas, don't get whipsawed. Step back. Wait for things to be clear. Save your gunpowder here. Wait for them to be clear, because they're not clear right now. Things are very jumpy. Things are very choppy. We've gone from where we were maybe an hour ago to trading up, a percentage point, and back down now to where we are. Things are jumpy. When my base case here is, and going back to this, I'll include the link for. I can't. Well, I don't have the link. Here we go. I'll include the link to this. Read this, Thomas. Watch the price action. If things start really unwinding, it could get ugly. But his base case and my base case are the same. He thinks and I think that equities and risk could continue rallying for another day or two. I think, and the only reason I think it is because back in 2008, it's not when the Senate passed the bill, the bailout bill. It was when the president signed it into the bill that was the top. And that's, history has a way of repeating itself. Do not get whipsawed today. All right. Wait for clarity. Let's wait for things to unravel. We have 1 hour until the bill passes. We need to see how price reacts off of that, and then assess. And then hopefully we still get risk on for a little bit further, a day or two, hopefully until that bill is signed. Rarely do things work out exactly as you want them to. So we need to be flexible. Just do not get whipsawed. All right. So, and again, I believe during this time, it seems like everyone is more short time frame minded than myself. I believe during this time, the best position is to build up a position, a portfolio of positions, because you always have to look out for the other side of the trade. The other side of the trade is all of a sudden everything miraculously fixes itself, and everyone's returning to work. No one's afraid of. Companies are downsizing. This before the coronavirus is not the cause of all this. This was already setting up. We were looking for that global slowdown. We were looking for that recession. It had been 12 years. The coronavirus was the catalyst, but it's a catalyst, a black swan catalyst, in that no one except those like the Bill Gates Foundation, the World Health Organization, John Hopkins, were expecting a pandemic to hit. And this little bit of black swan is actually causing not only everyone to be locked into their houses. So you're seeing things like Costco, you're seeing things like Amazon, you're seeing food companies, toilet paper companies, all actually growing. But the rest of the layoffs are real. Layoffs are serious. When companies start laying off, people are out of work, mortgages can't be paid, food cannot be provided. It gets very, very ugly very quickly. Everyone starts getting scared, rightfully so. The price of oil is down at $23.60. That affects a lot of people. but Jesse, how long? I mean, it's usually like buy the rumor, sell the news. Sell the news. Yeah, Trump is going to sign it, right? So you think we'll get the sign? I mean, are we getting the sell off now? I I don't know. Again, I'm looking for more 3%, 4%. We're kind of unchanged. Seeing the dollar pick up. Jesse's been a monster in keeping us informed. Everything that's been happening with the bill. Let me look at some levels. I don't want to miss my opportunity on these risk assets. So the low during London, by the way, which is kind of close to where I woke up this morning, I would say around 23.89, right? 23.77. That's about 2% lower than we are now. So about 3%. That's when I'll start getting concerned. Well, that's when maybe I'll dump my position then. But right now I'm waiting it out. This is squirrely and jumpy back and forth over here. Will Trump sign it today? Does anyone have any idea? So does anyone in the house, does anyone in the room, does anyone have a bullish case? Does anyone think that by May or June that the economy will be returning? I think President Trump is saying by Easter, April. I don't believe that. I think Apple is saying they expect to open up stores again in April. The governor of New York is saying now by the end of the summer. Hopefully. What's up, DJ? Good morning. Not Iran. We don't. So the idea is to get you to be able to trade for yourself. The idea is to teach you to fish. No one is here making calls for other people to follow. We're here to help and support each other. If you have any ideas that you would like to bring forth, we love to discuss them and weigh them. Any charts you want to look at, but you gotta, if you're not yet to the point where you're able to see setups and pick them and find out which is the best and trade them, then just hang out a little while, Imran, and don't trade today, because if you do, you're going to lose money. And if you hang out and wait a little while, you eventually get up to speed where you can yourself. Me too, Jesper. Yeah, pound was up pretty strong today, now dropping. Now negative on the day. You could see, wow, gotta love our resistance. Price came right up into that resistance, and that's where it's been sold so far, resuming downwards. Now, we got used to price going up and straight down, and I feel like this week right now is a consolidation week. So whether or not you want to chase after momentum or not, that I'm not so sure. But definitely here, the US dollar is coming back against everything. Dollar into this little area right now of local resistance. If it trades above there, again, we won't, from where we are right now, though, I wouldn't be surprised if we go either way. And either way, to the upside or downside. And markets are trading down right now. Risks coming back into the market, dollar picking up, but it's still early. Swiss franc now negative on the day. So I think that that's what I think too. I don't follow Elliott Wave. If you have a chart that you want to share. If you have a chart that you want to share, go ahead and send the link over. We'll take a look at it together. I don't trade. I trade off support and resistance. This is what I think. I think, originally I thought June. I'm now thinking July or August that the COVID might be contained as well. Thomas, maybe. I think in Mexico City in the next 2 weeks is going to start getting really, really, really bad, and I do believe that it could become one of the worst, hardest hit areas of the world. If that happens, and then things start getting contained in the U.S., they closed off the borders to tourists. There's still a lot of trade happening. I don't know. I think I could foresee the virus being passed back and forth. And in the States too, you have New York now, a hot zone. It's hard to contain people from leaving New York and going to other states. President Trump is calling for a 14-day quarantine for these people leaving New York after April, May, Rad. In Europe, perhaps. I think at the end of May in Europe, we should start mid-April to May in Europe, we should start seeing the things hopefully turning around. In the US, I think it'll be later. I think it'll be July, August. Now, the damage being done to the economy is what we need to watch out for. Or, is the amount of stimulus being injected into the market enough to contain it? That's the question. The market's forward looking, right? The biggest risk I see is a second wave hitting. In the Spanish flu, the first wave was actually the weakest. The second wave was the strongest by a large margin. And the third wave was about 3 times stronger than the first wave. So is this a one wave and done? These are the important questions. And getting back to, I think the easiest, the best way to trade over the course of this crisis is to build in positions, right? Here we're looking at the Australian dollar, Swiss franc. Look at the size of this severe downtrend. Is it over? Is this a bottom? Do we see a V-shaped bottom? Or are we coming out and we're going to make lower lows? I vote that we eventually make lower lows here, right? So is this a place to position in or to begin position in? I would say so. I have this as where I would like to get into it. Is that going to happen? I don't know. Would I, here as well? That would be great, but on the greatest scheme of things, is this a good place to be positioning in here now? I would say probably. If we cross to the downside here on the 1 hour, I'm regaining a position over here. Right now, I'm still holding off, waiting for that 1 hour true trend 111 period to turn negative. You could see here, actually, you have a signal right there on the 333. That's good enough to take. I heard too a little chatter about not a new virus, a pickup in cases in China. They're blaming it on foreigners entering the country, which which might be the case, might not. Wilford, what's going on? Yeah, it's back. I'm reading your message now. You're saying that you've heard that there's a new virus and now back in quarantine. If you do have any information on that, please do send it our way. Okay. Thanks, Danielle. All right. So we're about just keeping track of time here. We're about 50 minutes to they vote. Um, Markets more or less or where they started pre-New York over here. You can see that this is the range that we're in, right? You can see the low and then the high. It's too soon to pick a direction. It's a very important today to get an idea of how the markets react, to watch around the news what happens. Now, of course, the markets are already pricing in the fact that they're going to pass the bill. I like Adams' little summary here when he says that he believes that the Fed's extraordinary actions have averted a financial crisis for the moment, but the scale of the economic damage is coming into focus. This is going again. We're still looking at a slowdown, not a slowdown, lockdowns, parts of the world, more to come. They're talking about what Japan possibly going on lockdown now. Um, this is going to be like a rolling thing, and I believe there will be second waves that cause places that got off a lockdown to go back on lockdown. What is the economic damage going to be from that? Is the amount of response from the Fed, from the governments, enough to contain it? He thinks that everyone thinks that this is just a bull market rally. It's a question of how long it'll hold for. Selling off towards the lows. I don't want to get caught in the chop. So I'm showing a little bit of restraint and trying not to get left behind. Well, if we're doing excellent, absolutely. Well, really. So today's our probably like the 10th day of our quarantine. Each day that passes, knowing everyone is healthy, feeling blessed. Wife is doing a phenomenal job. The difference between the true trend 333 and 111, if you notice, the markets have been such fast moving over the past few weeks that I've been just experimenting with the 111 period due to the nature of the volatility. The 333 period, still phenomenal for trending markets like this. Like I said, if you want to know if you're on the right side or wrong side of any pair, and especially in this environment, in this exact environment we're in, pull up the 1 hour chart, pick a pair, and then look at it, and then you can know if you're on the right side or wrong side. 333, which you could find, you could use that, and you're absolutely fine. I'm exploring with an automated system here on the 111. Now, nothing's easy. When I say nothing's easy, you could see here that S&P is now trading down towards the low of the range from where they started. I would say about an hour and 45 minutes ago. Nothing's trending at this moment, and I still think it's choppy. I don't think anything is easy, and market's always trying to get people on the wrong foot. Watch out if the speed of this starts coming in faster. US dollar, Japanese yen looks pretty solid. Bullish on the US dollar, Japanese yen. Let's see if risk off comes back in, then who leads this time around. Beautiful, Wilford. Beautiful. I think it's beautiful. I think Wilford. What I think about that is that again, we're talking about how long we expect this to last, which no one has an answer to right now. We have estimates, right? Uh, you know, no one knows how long these lockdowns and quarantines are going to last, or until it looks like that we're starting to beat this thing. And then there is the economic damage that it's causing and will be prolonged. I think those should not, every position you have right there, I think is a good one. And I think that you really should ride them out. Have your risk in, know where you're getting out of those trades. But, normally if you were, for example, if you were risking 100 pips and you were, that was 1%, I think you'd be better off, bringing up trading much smaller for that 1%, and instead of looking for 100 pips, giving your risk for a little more than a few hundred, and being able to ride those positions instead of just trading in and out right now. And I have to be honest, Wilford, I'm hoping that that the Swiss franc here, which is now positive on the day, I'm hoping it comes off further. Right, that would be great. I would love to get positions up higher. If it turns here and it's turning to the downside over here, I'll wind up getting short within sometime in the next few hours, maybe. But I'm hoping that this risk on lasts a little bit longer. So I hope the picture that I'm painting is very clear for all of you. What I'm trying to get you to do is think the best, the greatest way that you could profit in the situation. I want to make sure everyone's protected. Own gold, own Bitcoin. I want to make sure that everyone is not only, obviously everyone has been very good in this community about making sure everyone was aware of the situation from the very beginning. We were on top of this since late January, monitoring the situation throughout, and the same way we monitored the way that it could possibly grow into something alarming. We need to also be monitoring, when it looks like that things are going to look better. But we need to continue to be aware, keep our families safe, keep everyone safe, and use this as an opportunity not only to get through, because if you're talking about a depression, if you are talking about an economic world depression, people are going to be out of work, people are going to be hungry. It's going to be a terrible situation. How do you protect yourself and your family? And not only that, how do you be one of the few who's able to thrive in that environment? Right? So chasing after 20 and 30 pips is not the way to do that. Let me be clear. That is absolutely not the way to do that. What you need to do is you need to really, really take advantage of this time, and really just get yourself thinking differently, because we're not in a normal environment anymore. I saw one of the most important things regarding that, Wilford, that I saw today was that, so what they did was they reduced the number of tubes, the routes for their metro, and this is causing the ones that are running to be much more crowded. So in the few trains that are running, everyone is much more crowded in together. That's not good for containing the virus. That's not good at all. Um, I would imagine things get much worse in the UK. Yeah, Mima. So if anyone is short right now, if anyone is short right now, then look at the true trend on the 1 hour, 333. Right, you're on the right side of the trade. As far as levels to the downside, no Mima. There's only a stop loss, right? If the true trend turns back positive here on the 333, get out of the trade. Then you're wrong. Now I am waiting for the 111 to turn negative. to get short here. But if anyone is short here on the 333, you're doing the right thing. And in this case, it looks like it's wound up being a better entry. So what I do recommend is if this turns positive, getting out of this trade, but giving it the room to the down. Like, do not take longs. Only look to short this pair. Short it when the true trend is negative. And as far as take profits, well, let's see what it gives you, right? You know, I would assume there's a solid chance we come in and test 0.56. I would love for it to come down and take out this level to the downside. I think ultimately we're going lower, or at least that's what I'm going to be positioning myself for. Beautiful level on the Australian dollar, Swiss franc, Wilford. That's a good target. It's right where we were just looking as the first target we assume as well. Now oil, I wonder, right? A breakdown below this level of 20, which I sincerely think eventually is going to happen. That could lead to much lower levels. 1450, first stop. Definitely, 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 Riyadh. So right now, the thing to do is not get caught in the chop. Markets are choppy. Markets are very erratic. Let's look at a 15-minute time frame. See, do not. It's very choppy, right? Do not get caught in the chop today. No, no, no. Yeah, I want to, Jesse. I'm Wilford. And you can see that patience paying off, by the way. Because we've come off about 500, 700 pips from that lows, just waiting it out. We're about a little bit more than a half hour away from the vote taking place. Market reaction is going to be important. Again, what I am expecting, and I have no idea that I'm right, believe me, is that we continue exactly as Adam. There's the link if anyone wants to read it. Exactly as Adam said, that we could get another day or two of a rally in this risk on. And if I'm wrong and it falls apart today, it could get ugly really fast. I've we are market's choppy. I'm ready to jump on either side. I don't want to get caught in the trap, so I'm kind of waiting for things to be clear. Nothing's clear right now. Nothing is clear right now. If we break above outside of this range to the upside, then I think that's a wave to ride for a little while. Nice. Bitcoin. Bitcoin looks pretty bullish to me. Almost all of crypto Twitter is bearish Bitcoin. Bitcoin looks pretty bullish, especially as it holds this line of support over here. It's hard to be bearish above that line of support. Uh, I've heard chatter. I don't want to get short here at all at any time. Equities, only because I've heard chatter about that. I don't think it'll happen, but I've heard. I don't think it'll. Never mind. I've heard chatter about them closing the markets and people throwing out there, how they think that's a good idea. I don't know. I think that probably the Fed would step in and actually be buying stocks before any of that happened. Beautiful. I did step in this morning right before we got online at 1.18292, getting short. Um, Again, we've about a half hour now until they go ahead and pass that vote. We need to just be aware of this area that we're in. And I don't have no idea, I honestly, I think that these are extraordinarily difficult trading conditions personally, because we could break down out of these lows over here. We could come in and test, even as low as right around here, I would say 2.335, and then that area could hold as support. It's not, it's very difficult trading environment today. I think going back to Samantha and the dollar milkshake theory, it seems to me that that's all, like, the dollar is almost old reliable right now, and I don't foresee the dollar all of a sudden weakening. It hasn't weakened after the Fed cut rates to and did $4 trillion of stimulus, or of QE rather. This is a good headline. Fed's Bullard says the second quarter economic data will be the worst ever seen. So, back to anyone who's in, whether it's early or not, I don't know, but kind of the sense I get is that if we do get further risk bounce, it should be sold within a couple of days, or that's at least where I'm leaning into. So, leaning in here now, as long as you get out of this turns positive again, you'll be safe and protected with limiting your risk, and you have a pretty good entry. But in greater scheme of things, I do not see things turning around, or even close to things turning around. From what I see, normal people, they seem to be pretty aware of the damage being done and accepting of it. Dow turning green right now again. Again, it's very choppy. I'm using this as a barometer for risk on, risk off. and I don't want people this morning. I don't. The best advice I'm giving this morning is recognizing the fact that things are very, very jumpy out there. Do not get whipped around. Do not get whipped around. So I'm a little pissed at the euro US dollar here. Again, I'm holding shorts between 1.12 and 1.14. I hedged them all the way down here. It was the perfect spot. And then I didn't get a chance to take off anything over here. We were closing Friday, yeah, or yesterday, all the way down here at right there at 1.75. I took those hedges off. And then since we traded back up another 70 pips, we're above this area of support, Wilford, and we're below this area of resistance, which I could probably move down to here, making a little more sense after seeing this peak up around there right now. And we're kind of in no man's land, and I still have a bullish bias here, even though I am short. And I think we gotta lose this or take out the support level to the downside in order for the bearish case to come alive again. I think we're in no man's land though, with a slight bullish bias. I like your other positions better, Wilford. It's almost a lot easier looking at the 8 hour here for direction than looking at that 15-minute chart, which is intimidating. And that's the thing, knowing that we're in an area of consolidation, knowing that it's jumpy out there. Move up to a higher time frame. We're gonna get. We're in an environment in a crisis where trends are going to trend. Um, wait for the trend to pick up. This is the dollar milkshake theory in action as well, because it talks about as the U.S. Adds all this QE that other countries are not going to sit there idle, and they're going to be destroying their currency as well. And it's just that the dollar is going to be the strongest of all of them, being a dollar debt based system. Here you have you know Germany backing a $750 billion spending package, stimulus package. Now, being that the German economy is 1/5 the size of the U.S. economy, that's greater than the 2 trillion package being passed right now by the U.S. I think Jesse posted a link. The Senate, this is from Jesse. Jesse, thank you. The Senate will be the first to hold a vote to end the debate and clear the way for the final Senate passage. Likely later Wednesday, after its expected passage, the bill will head to the House for a vote, there before heading to President Donald Trump for his signature. We should know later how long that will be for the package to get to Trump and be signed, maybe tomorrow or Friday. That's really important timeline for me. And again, at the end of the day, I'm gonna be following price, but I have to have a more or less a base case to follow. For me, that is as this gets passed through the Senate. Thank you for clearing out the timeline. Then it then goes to the House. Um, until it gets to President Trump, I'm looking for a little bit of a rally to continue as President Trump signs it. And on Friday is now we have 8 weeks in a row of risk off coming into the markets. Will this one be different? Maybe, but as President Trump signs that will be the latest that I will look to come in and dig in and get ahead of the move, because I want to see what's happening next, right? So in looking what's happening next at the time he's signing that, for me that's a sell the news type of event. I hope I get there. I hope it doesn't reverse on me before I get a chance to do that. Pound continuing to see pressure. DXI turned positive, huh? Trending up. All right, Stinkar, you nailed that one. The dollar remains a beast. Now, when Goldman Sachs starts talking about, it was yesterday, the fact that, as the dollar strengthens, they're looking for, probably the Treasury to come in and intervene, which probably will wind up happening one day. But until there's like a Plaza Accord where all the different central banks across the world go in and take unified action, when countries act individually, it doesn't turn out to be work out well in the end. Um, it's going to be temporary. If Goldman Sachs they're notorious for actually trading against their clients. It seems to me, if they're saying that, when you see that type of headline, that they're looking for further dollar strength. Markets turning positive here now. Again, they're choppy. Don't get suckered in either which way. About 20 minutes now until the Senate revenes. Yep, just waiting. Appreciate you all just waiting here with me. It makes trading a lot nicer to have this solid group. Collective knowledge. Well, uh, well, Thomas, to be honest, I can't answer that, but it also, I think it is the strongest currency right now, relatively speaking. Over the past, what is it? Going back here to the height of the crisis. Well, I guess it's all relative, and again, I can't answer that. I guess it's all relative too about the time frame that you're looking at, right? We could say over the last month, the dollar has been the strongest. Yeah, that's a good growth mindset, Dinkar. That's a really good growth mindset. At the end of the day, it comes down to whoever puts the most work in, whoever is the most disciplined, whoever's looking to grow every day. It's not the smartest. It's not even the most talented. It's he who goes in and every day looks to go ahead and better himself. It is really just important to note that today everything is almost back to normal daily movement. And I don't think that's anything more than a pause. Amir, Steve, what's going on? Good morning. I'm going to be watching price. I'm not going to be watching the vote, but here's the link to the Senate. Absolutely. And it's really important also to get that perspective, that international perspective, to find out really what is going on in the world. All right, about 10 minutes now. I'm hoping that we see a break of this range happen after the Senate vote. That will also give us a dollar turning positive now. Watch the US dollar, Japanese yen. Once it gets above 112.20, I become uber bull. I'm long and bullish. Uber bull above 112.20. They heard about that, huh, Dinker? I heard that the last time Prince Charles saw the Queen was 13 days ago. So she obviously is also at risk. Recognize the market conditions. Market is breathing. Choppy. Important vote beginning in about 10 minutes. Obviously, it's expected to pass. There's no question about that. Question is, how does the market react? Steve, let's look at the Euro US dollar. So what I'm seeing happening is right that price, this green line of support, right? Price that was resistance, price came above, traded above that resistance, which is now support, came into this area of resistance, tested the support successfully, and is now trading above it. Since it's above this support, I give it a slight bullish bias. If it trades below this support, I would become very bearish on the Euro US dollar. Again, I'm still holding shorts from up here. Now, I think it's kind of neutral, being that it's between this resistance and above this support, a little bit coming back down into that area of support. Perhaps maybe if price was to resume out of there to the upside, I would give it a bullish bias again. But I think it's more neutral than anything. I don't really see a play on it right now. What about you? What do you see? Yeah, that's smart. Always to look out for the other side of the trade and the biggest risk, and that is the biggest risk right now. That if we were to see any type of surprise in the vote, meaning that the vote did not pass. Well, if the vote didn't pass, probably what happened next, game theory, is that well, they're going to work out something by the end of today that does pass. So although the initial reaction might be equity sell off, dollar probably strengthen on that. At the end of the day, they're going to pass something. I think it's more neutral. It's not very exciting right now, but everything else, everything is kind of pound is on the move. Pound US dollar is on the move. All right. So it's time. Vote should be taking place shortly. I'm not watching it. It's really boring. I prefer just to watch the price action around it. That's what I'm going to do. Nice, Thomas. Are you holding or do you have a target on that? Definitely whipsaw. So again, I have to say I've adapted to the current market conditions, which we are obviously we're in a crisis. I personally did get short this morning here, 1.1829. So it's about 120 pips. I'm still holding. I you know, my intent is continue building out dollar positions, and again, I'm not so short time frame minded right now. No, just what I mean. This is a huge event that the market could key off of. So I'm watching how price reacts around that event. Our base case is that, or my base case is that this current risk on environment, which I would look at as a retrace and or consolidation period of the last leg down, is nothing more than a slight pause, and that things are going to continue to be pretty bad all around. And obviously, the economic damage is pretty severe and probably get worse as more and more people are laid off and out of work. I think that the more layoffs come within the next 2 months, or I should say, anywhere from the next 4 to 8 weeks, is when we start really seeing layoffs, which right now employers are trying not to do. I mean, we've already seen massive layoffs, massive layoffs. I'm looking for I'm not looking for the corner to be turned anytime soon. Even though I'm aware of in 2008, it was shortly thereafter that the stimulus bill was passed and the Fed acted, that things did turn around. I don't think this is the same thing as 2008. There you go, Thomas. I'm with you. If anyone's ever held a position against them, if anyone hasn't held a position longer than they should against them, then you are a rare breed. But for those of you who have, which I have many times, have held a position longer than I should against me, you can't get into that position unless you hold it longer than you should. You have to flip a switch and realize the same can happen on the other side. If you're so eager to take profits, you're never going to get a trade, a windfall trade. And I do remember back in 2008, I remember, so just to give you perspective, it was on the pound Japanese yen. I'd enter that trade in 3 positions, all my trades in 3 positions. I was trading the 4 and the 8 hour. 4 hour outperformed my 8 hour. Both were absolutely stomping, amazing. But one trade taking on the pound Japanese yen. Good morning. A trade that was 0.02% of my portfolio. 0.0, no, not 0.02. The risk on the trade was 0.5%, a 0.5%. And this was, man, I guess 1/5 of that risk. And it wound up holding that trade because I didn't have to take profit. I had to take profit on orders 1 and 2, not on 3. That third order without a take profit went on to have 100% return of the total portfolio. Dollar picking up here. Dollar strength picking up. I want to find out what's going on with the Australian dollar. Swiss franc, that's also picking up. I wish I would have got short. I'm not yet short. Gold and Bitcoin are kind of off a tiny bit today. Makes sense after that huge move up on gold yesterday. I want to check out some mainstream headlines in this moment. Jesus. No, let's take a look. I haven't looked at the Euro Japanese yen, only because it doesn't fit into my whole overall portfolio. So this actually looks like a very interesting area. If I'm gonna pull up to a daily time frame though, if you don't mind. And why I say it's interesting is because I have this line. It's marked as support, but that's resistance, and we're trading into it right now. This does look like a really good, strong area to short into. Personally, it looks very tempting and very strong support, and all the way up to 121.37, right? And then I don't know if we'll ever get back up there for a while or not. But DJ, to me, that looks like an area to come in and lean against if price resumes off there. Or if we get up to, again, if we get up to the next level off there. But as we retraced up into this area of strong resistance, and look over here, look at that support, resistance, this whole area between 121.37 and 120.70 is an area of strong resistance. Ooh, I'm bringing all 5 of the kids and the wife, Jesse. That sounds awesome. Do bring out some chocolate I'll ring the graham crackers. Yeah, Jim, I don't like it. I'm not trading it. I prefer to take on Australian dollar, New Zealand dollar, um, versus the Japanese yen, and the US dollar long the Japanese yen. And I've played out in my head, is it possible that the US dollar breaks out to the upside and goes ballistic bull against the yen, while the yen is stronger than other currencies, all other currencies? And I don't see why not. Yeah, it just Sunset. It's the same. It's the same concept for sure, and that is the strongest way to trade. The video you're looking for there is the very easy, profitable trading strategy, and man, that strategy this year is cleaning up in this environment. I agree with you strongly, Jim. Good assessment. Thank you for sharing that. I'm gonna be quiet here for 2 minutes just because I'm gonna just say good morning. All right. Oh, Sunset. That is. Please do, and and consider doing nothing else. And definitely also reach out to me if you have any questions or anything regarding that you want to discuss. So we're kind of still watching paint dry, dead center in the range, dead center. I'm not sure what's going on with the vote. No, I mean, listen, I'm going to say it 100 million times because I truly, truly, truly am grateful. I feel blessed and so appreciate being surrounded by the collective of all of you. Um, I, I actually love that our community is so small and tight because it is a good one. Oh, is that the truth? It's only 114. That's right. Oh my goodness. Thanks, Jesse. No, DJ. I mean, DJ, you are the man when it comes to oil. So you stepping in here buying me tells me that it's going to, well, good place for sure. I saw a headline just now about that right here. This is from the Wall Street Journal that at the G20 meeting that the U.S. was going to use it to press Saudi Arabia and Russia to stop suppressing oil prices. I don't know what kind of leverage the U.S. has anymore, to be honest. And I don't know that Saudi Arabia and or Russia, especially, is going to listen to the United States plea. But oil could bid up into that, possibly at least. I also like looking at your trade over here. And again, in it, so you're better than me, but looking at this little area of what was, and it's small, right? So above there, above 22.70, looks like it could, come back up here, and then we got some further resistance towards 29. Dow leading probably has something to do with Boeing getting bailed out. Let's check it out, Kevin. Yeah, you're right. You're right, DJ. But I don't think the Saudis like the Americans. So I don't know if it's this. I mean, what I initially see is this, right? And I wonder if it's also that. It's the first time you ever see me draw anything like that. But this look. I mean, yes, I think this is bullish. I think it has a good chance of breaking out to the upside over here. Um, Now, was the play off this area of support down here, lower towards here? Probably. Is it worth chasing up here? Probably not. Probably wait for the breakout above this trend line. And then if that happens, then it's a good chance we come out and test the highs and or higher. But if a trade with an entry a little bit lower off of this support, horizontal support, and this trend line that we dipped into over there, looks like the trade has gotten away from us to the upside, where I wouldn't chase it towards the resistance over here, because this is resistance, this trend line. Now a breakout to the upside, that opens up the door to get back into that trade long, a break to the upside. But there's also the possibility, or what should happen is this resistance even holds and we come back that down again. You have another chance over here to get long again. So I think this was the long, and I think the trade has gotten away from you. I do agree that this does look like a potential possible bullish outcome, but right now the risk to reward is not in your favor. Better to wait for a breakout, a confirmed breakout to the outside of this to get into that trade. That's my view on it. Nice spot. Nice setup. And again, it's really as simple as that. You trade these things correctly, and you're gonna wind up on the green side on your P&L, 100%. Jesse, I had my time or I was an hour ahead of everyone else in the world. Imran, let's look at the pound. This is the pound Swiss franc. So, hindsight is always really easy to trade, right? So again, in real time, I don't think I would have been able to really participate in this at all. You know, I don't think I would have at all. But it looks like this area of resistance is being respected. Prices already traded off of it. So you're coming down over here where my mouse is right now. If you look horizontally at the dotted line, you can see that's a little bit area of actually support that you're coming into. So you get below there, and then this thing could really start resuming with strength downward. But right now, you're in no man's land. I would not be buying this. This is a downtrend. This is a downtrend. We sell resistance in a downtrend. There's the resistance. The entry was up a little higher. I wouldn't have taken it. But now from where you are, although you're coming into this little bit area of support, price could possibly bounce over here, maybe give you another area to get short. Or if you break down below, then I think we're coming down and we have potential of testing the lows. If we break out to the upside over here, I think you're just looking in this area to lean into to sell, right? But we're in a downtrend. We're selling strong resistances in downtrends. I don't think I would have got in there. Is a good one. I did get in here this morning, and it looks very similar, but I'm more in this moment more US dollar strength minded, and I'm looking aware always of my risk and what could go wrong, but I am building up dollar positions, and I got short here. I'm just holding it. Got short at 1.1829. You could see the resistance in downtrends. We sell off resistance, right? If this breaks to the upside over here, right, this will give us another chance. This is more resistance, strong resistance. Pound looks weak today. Pound was strongest currency going into London, though. Markets remain choppy and undecided, although there are slightly holding on to gains here on the S&P. We're still remain in our box. I hope we break to the upside. That would be great. I've got a big position on long S&Ps at 22.59 and also 21.92. But if we break down outside of that box, I have to get out of them. If we break out to the upside and we could test, 26, 27, that would be lovely. All right, everyone. I think this is a good time here to call it a session. I just want to really, again, it's been a couple of times today, but it's from the heart. Really thank you all. I really am grateful for all of you and all of the insight that you all bring. You all make me a better person, a better trader, and I'm grateful for all of you. Hope you all have a wonderful day. Be aware of the market conditions. Today was not a trending day. Pound US dollar definitely offering that opportunity. It seems like most of you guys who are in here were on that. DJ, I like your trade on oil. Be safe, everyone. Let's switch that mindset to be aware of the situation we're in. I want everyone not only to survive this, I want everyone to come out thriving because of this. It's not going to happen unless you make some changes. I'm here to guide. I'm here to help. All right, everyone. Have a great day. I'll talk to you later.